This is Matt Russell from the FX Power Course, and welcome to the Daily FX Walkthrough.
So here are the four pairs that I will be discussing this evening: the Euro Pound, the Aussie Kiwi, the Pound Swiss, and the Euro Swiss. So let's go ahead and pull up the charts. The first chart is the Euro Pound, and this is a simple support line that I've been using for the past several weeks. In this pair, right now, as I was mentioning, the last trade I had in this pair was this potential double bottom right here, with prices rebounding just beneath that 88 figure. As I mentioned, I believe in two reports back, we might look to take a little bit of profits here, but the ultimate target would be the longer term support line, which was violated, which should now act as resistance, or also just the simple resistance line formed by joining the highs here, which is just above that 92 figure. The next chart is the Aussie Kiwi, and not much has changed here. Again, still short the pair off the doji candle here. The stop just above the high of the doji candle, which is about 29.35. I added this price channel a few reports back, and we can see the prices have pretty much stayed within this price channel. I also mentioned that we might look to take at least a portion of our profits at the lower support line of the price channel, so hopefully you had an opportunity to do that. And right now I would just stay in the short trade, possibly adding a little bit on the resistance line here. That's for more aggressive traders. We'd look maybe to enter just at the resistance line, and maybe a stop 50 to 75 pips above that short-term resistance line. And again, this is a very short-term pattern, so reliability and confidence will be low. The next chart is the Pound Swiss, and here I'm just simply waiting for prices to come down and test the simple support line formed by connecting the lows. This is the late 2008 low and the mid-March low right here, and looking for the third touch of the support line. Again, we'd look to enter just above the support line with a stop maybe 50 to 75 pips beneath the support line. The last chart is the Euro Swiss, and again the sideways movement here continues. As I mentioned for it seems a few weeks now, just waiting patiently for prices to come back up and test the longer term resistance line, which right now is just about at that 153 figure. Again, and this would be the same trade as the Pound Swiss trade, except in the opposite direction. We'd look to enter just beneath the resistance line with a stop maybe 50 to 75 pips above the resistance line, and again waiting for prices to hit that resistance line before we enter. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.